All right, good morning, good afternoon. So, this video will be a quick one and it will be a market review of the previous week's trading as it was called live on the Telegram channel. So, we caught this sell from this Sunday, the 26th of January, lower, and this gave us the narrative for bearishness in price. So, when this was established, after price has taken out buy side liquidity, which was resting above here, I'll try to be as alright. So you have buy side liquidity resting above here, resting above this liquidity pool. So we took that out on the 20th of January. After this buy side liquidity pool has been purged, it was indicated after this back and forth price action. This drop in price is indicative of bearishness in price action. So when you had this quick and energetic drop in price, we've gotten an indication from IPDA that price is seeking bearishness, seeking this relative equal lows, these lows here, these lows here, and ultimately this imbalance here. We do not need price to come to this imbalance here for us to be profitable. Now, this was the business for the previous week. This this is the daily imbalance here. This is the imbalance we're expecting Bitcoin to come to rebalance here. So hence bearishness in our execution. That doesn't mean there won't be short term retracement in price rallying higher. All it means is that we are more focused on sales. We are more focused on taking sell positions. Now, on Tuesday, we indicated this low here on Tuesday. We indicated this low. Why did we indicate this low? If you're not on the Telegram channel, most of what we'll be discussing here in this particular video and other videos to come, it will fly over your head because most of what we'll be discussing here are what we discussed live before the market printed what it needed to print. So after price dropped lower here, we understood that this drop in price now, this drop in price action is the algorithm tipping its hand to those that are in the know of bearishness in price action. Now, if you take a look at this right here is a swing point. This here is a swing point. If you take a look at this swing point and you look for the highest body and you draw that out in time, you draw this highest body out in time, this is a rejection block. So we had this rejection, so we had this rejection block resting above the marketplace, meaning this is a premium PDRA. Now, when order flow has been established as bearish, in this case, a clear one-sidedness in price delivery. So order flow has been indicated as bearish order flow. Now, when you have order flow being indicative as bearishness, from the high of this candle to the low of this candle, this is a swing, is a tradable swing point. From this high to this low, don't worry, I'm making use of the wicks now to drive a point on. Every PDRA is resting above the midpoint of this candle, the midpoint of this equilibrium, the midpoint of this range. Every PDRA above the equilibrium, it is of a premium PDRA, and every PDRA below the equilibrium, it's of a discounted PDRA. Here you have this imbalance. I'll take all of this off after marking it now. You have this imbalance here. You also have this imbalance here, which is this week. The midpoint of weeks are imbalances. So you have all of this. You also have this CB. You draw this out in time. This is a CB. I'm going to take all of this out now because This is just to drive up our point of us selling from a premium PDRA down to a discounted PDRA. I've covered that in a couple of videos in this YouTube channel, but as we as we study more and more videos are released, you get to understand the concept and the idea behind selling from premium PDRAs and buying or covering or taking profits at a discounted PDRAs. So all of these are discounted PDRAs. The midpoint of this imbalance here is PDRA. This here is an immediate rebalance. You draw that out in time. That is a PDRA. So you have all of these multiple PDRAs indicating price wanting to come for these discounted PDRAs after price goes to a premium PDRAs. Now, back to what we're discussing on price. Now, back to price. Now, you have this imbalance here, resting. So, you have this sell side liquidity pool on Tuesday's trading and also on Monday's trading. Monday, sell side liquidity. Now, when you have a joint liquidity, you want to have multiple points of interest for you to take partials out. That will give your trade idea a higher, it will be of a higher probability trade setup because we are not 100% sure that price will come straight down to this PDRA, which is that CB, which is the BC, sorry, which is this BC. So for that reason, we give room for allow for errors and give rooms for partial takings because partials are perfect trades and you want to bank on those types of trades. Now, you have this daily imbalance here. I'll move straight down to the 1 hour time frame so we'll get the meat of it all. So currently here, what we have here is the daily fair value gap, this daily imbalance. Now, as you can see, the bodies of this are failing to trade above all of these candles, these candles close. This is the algorithm indicating to you of bearishness in price. When this rejection block, when price chase above this rejection block, we've already, when this rally started going higher, we've already established that price has already taken out buy side liquidity here from this major liquidity pool here. So price is seeking sell side liquidity. That means for price to seek efficient sell side liquidity, adequate sell side liquidity, it will engineer this sell side liquidity that it wants. So that way, it engineered this sell side liquidity on Thursday and also this sell side liquidity on Tuesday, on Monday, sorry, and on Tuesday. Now we're going to go lower to the 1 hour time frame to see why this was indicated. This relative this year on the 1 hour time frame was relative equal lows. Now, as you can see on Tuesday, relative equal lows was left in this body of price action and it was indicated to the group on the Telegram channel. So here you have relative, so you have relative equal lows resting below this point. Now, why are relative equal lows resting below here? Most of the time, you want to know your targets first before your entry because the target is the most important thing in a body of price action when dealing with algorithms because you'd want to understand where price is likely to go to next. That is your main concern when trading. You want to understand where price is trying to likely go to next. So when this rally started higher, we already understood that because we've taken out buy side liquidity, every PDRA resting above the market price that is a premium PDRA, that's of a premium PDRA. We want that premium PDRA to act as a resistance PDRA, resisting price from going for higher prices. Now, that rejection block we indicated from the daily time frame, it was seen in a live settings as a premium PDRA that should act as a resistance PDRA. Now, when price traded to the rejection block, we rejected lower. This rejection lower solidified this rejection block from the daily time frame, that this rejection block will act as a resistance, resisting price from going for higher prices, because we've already indicated this relative equal lows. This relative equal lows was indicated far before this high was made, because you want to know where your target is first, then you get to know where price will likely see a reversal from before coming for your to your draw liquidity, which is your terminals. And now, from this low to this high, price has currently created a tradable range, which is this low. I'm going to take this off real quick. From this high to this low, this right now is a tradable range. Now, you want to be selling at a premium PDRA. Everything, every PDRA above the midpoint, it is of a premium PDRA. So now, because it has been indicated that this rejection block should hold, when price gives us an indication for bearishness, we would want to capitalize on that indication of bearishness in price. Does that make sense? Now, on Thursday's trading, after this low was created on Tuesday's trading, all of this rally higher here, this is a fake rally. All of these are manipulation. Now, I would employ you to go to your, if you can access your economic calendar to understand the back story of what happened within these 2 days, which is Tuesday and Thursday's trading, because this is extremely significant in understand how manipulation, how the market makers makes use of the economic calendar, which is of fundamental basis to engineer sentiment in price. Because when this relative equal lows was created here, a lot of traders online, on Twitter, on Instagram and whatnot, they see this as price making a strong low, meaning this relative equal lows cannot be breached. If you look, the low of this candles here, of this candle, this is what I'm indicating now. Pay attention. The low of this up close candle here is 100 4.96. The low of this candle here is 100. This one I'm pointing out. This low here. So the low here is 100 274.96. The low here is 100 272.69. This is extremely relative equal lows because they are close together. The uninformed traders will see this right here as price making a low in price, and then we are going for 100 for 200k Bitcoin. I'm speaking facetiously. Now, when we created this candle, this bullish candle on Thursday's trading that went to this rejection block, this right here now, we are waiting to see if this rejection block in fact acts as a rejecting price from going above it. Then it did that here with this up close candle here. Price rejected lower. When price rejected lower, you draw this out in time. This right here is a fractal inside of a fractal, which is that rejection block which you have on the daily time frame being represented here on the 1 hour time frame. Here you have a rejection block. Now, when this 1 hour rejection block was created, you do not know if price will come back to this rejection block to trade. This up close candle that has been established, because after price pierced this rejection block, we started price started seeking bearishness in price action, seeking lower prices. Now, as price keeps seeking this set of these lower prices like this, you would wait for price to retrace back to this up close candle here, which is a bullish order block. So, which is a bearish order block, sorry. So you draw this candle out in time. You draw this candle, the opening of this up close candle out in time, which is a bearish order block. When price chase lower below this order block now, you are expecting this order block to maintain price, resisting price from going for higher prices. So every time price chase to this order block from Friday's trading at 8 o'clock, you enter a sell position. As it trades higher, also this rally higher is to bring in traders to buy at a higher price. When price rallies higher like this to premium PDRAs, like this rejection block here, you see the wick went to the rejection block, but the body is telling you the story that the other block is being used as a resistance, resisting price from seeking higher prices. Now, when this rally occurred, when price rallied higher here, this is the algorithm manipulating buyers to come for higher prices. Now, the buyers that miss this relative equal lows and place their buy orders here, expecting price to drop lower, and they will buy from this their relative equal lows, because now they've placed orders to buy low for at this point. Now they would adjust their stops. The ones that bought here, they would adjust their stops to this low. Some will adjust their stops to this low. Does that make sense? And others will adjust their stops to this low, because these are relative equal lows. The uninformed will see this and think price is creating more relative equal lows, meaning we are in fact bullish. But because they are not aware of the narrative we've gotten from the higher time frames, understanding the idea of price delivering buy side liquidity, pairing those buy side liquidity to corresponding sell side liquidity. They are not aware of that logic. For that reason, they place their stop loss here, place their stop loss here. Does that make sense? So when price was going higher here, the buyers that bought here, some will rush more and buy when price was when price is making this rally here, doing the 10 a.m. candle here, doing the 10 a.m. candle, price rallied higher. Immediately price rallied higher here, it engineers buy orders from retail traders. So retail will be buying, buying, buying. And smart money, we use this their buy orders as a counterparty to their impending sell orders, which will be taking place, which should be placed above all of these highs, above all of this liquidity pool. Here is a relative equal high. I will employ you to go and map that out by yourself. Here you have a relative equal high. You draw that out in time, price chase above it, pair buy stops with it, seeking sales side liquidity, which is sell stops, which is resting below this relative equal lows. Then you had this drop on Friday by from 11 a.m. price started dropping. Then at 1 a.m., you had this energetic drop in price. This energetic drop in price, this is seen as a breakaway gap. Remember, we are still with this is the daily imbalance here, which we expected price to act as a resistance. So when price trades above it here like this, price comes to the eye of it, uses it as a support, rallies higher, then drops lower violently. When you have this violent drop lower, this is indicative to you that price is in fact coming for this relative equal lows. Now there is no ambiguity if in fact we are if the in fact the algorithm is interested in this relative equal lows. When you have this here is seen as a breakaway gap. When you have a breakaway gap in price action, this is the algorithm telling you that we are in fact seeking extreme bearishness. We are in fact seeking extreme bearishness in that body of price action. That means for that reason, you are not interested in buys. If you were blindsided by maybe over analysis, being impatient, or whatever flaw you might have as a human, if you had that, This breakaway gap, it gives you a framework to work with, that price is in fact seeking lows and not seeking higher prices. So you can then, in fact, because this is a breakaway gap and you do not want this to be filled, this breakaway gap now is now your invalidation point. For this breakaway gap to be filled, this means price is not interested in sell side liquidity. Now, because you do not want this breakaway gap to be filled, price created this fair value gap here. And we understand that price does one of two things: rebalance imbalances, which is what it did here, or pair up liquidity, which is this. So price rebalanced this imbalance here, which is a fair value gap. So here you have a fair value gap. So price trades inside of this fair value gap. And now, as you can see, if you look closer, the bodies are failing to trade above this fair value gap. This is price indicating to you that it is in fact seeking this relative equal lows, because it does not want to trade above this fair value gap into this breakaway gap. This is multiple confirmations telling you this relative equal lows is in fact its drawn liquidity near term. It's near term drawn liquidity. And this drawn liquidity was indicated before all of this was done. So that was done on the Telegram channel, and I would employ you to study this body of price action. Price is price. It doesn't really matter the asset class, but because personally trading Bitcoin, Ethereum, and the indices market, which is the S&P. That's the only asset classes I trade, and they are on different accounts. The account for the cryptos are separate from the account for the indices, making my strike rate and executions palatable and well organized for documentation purposes and whatnot. So you have price trade inside of this fair value gap, fill this imbalance, here, making this a balanced price range. Now, what you have here, from here to here, this right here is a balanced price range. And when you have a balanced price range like this, let's make this, let's use this. So when you have this balanced price range like this, you want to see price show quick willingness to leave this balanced price range, because range once a range of price action has been balanced, price has no business staying too long inside of that price range. Does that make sense? So let's take this off. So price trades inside of this imbalance again after breaking market structure. So after price trades inside of this fair value gap, it drops lower below this swing low here, making this a break of market structure. This break of market structure is synonymous with this energetic drop lower. Now, this break of market structure is telling you that price is in fact coming for this lows. So when price broke this market structure, price rallied higher, making this an intermediate term high. This intermediate term high is rebalancing this imbalance now. For this intermediate term high to rebalance this imbalance, you do not want the next candle that is rallying higher to trade above this candle here, this swing point. Now, if you take a quick look inside of it, this high was not violated by this, making this a short-term high. Now, if now as price trades rallies higher inside of this imbalance, you sell, seeking this relative equal lows, and we had that here on Saturday's trading. So I hope you got something from this video. I'll talk to you tomorrow during the live streams. And if you're not on the Telegram and you wish to learn more and go deeper inside of your understanding of price action, I would employ you to join us in our Telegram channel. Have a nice day and good luck, good trading.